from the normal zone into the elevated zone. Hedging demand is increasing. Equity impact, short-term headwind. Expect choppy price action. Here's the framework. Anything under 17 is complacent. 17 to 20 is normal. 20 to 25 is elevated. That's where we are now. 25 to 30 is high fear. Above 30 is panic. At 21.7, we're in the elevated zone. Not panic, but not comfortable either. Here's the practical implication. The elevated regime triggers a reduction in position sizes. You can stay long, but smaller. The quant model keeps a cash buffer for exactly this reason. Equity impact, stay directionally bullish, but trade smaller. Write this down. Quick credit check. What it is: high-yield bond spreads. The canary in the coal mine. What it's doing: high-yield ETF is flat. Investment grade is up. Long treasuries catching a bid. What it means: no stress in credit. If spreads were widening, I'd be worried. They're not. Equity impact, neutral to supportive. Credit confirms no panic. This is the key cross-reference. When volatility spikes but credit spreads don't widen, that's an equity-specific move, not systemic stress. The dollar tells a story. What it is: the dollar index. The US dollar against a basket of major currencies. What it's doing: 97.11. Up 21 basis points overnight. What it means: dollar strength with falling yields is a classic risk-off pattern. Money seeking safety. Equity impact, short-term headwind for risk assets. But context matters. At 97, the dollar is moderate, not extreme. It's not at the wrecking ball levels that really hurt. The yen is strengthening, down to 152.90 on dollar yen. That's carry trade pressure, worth watching. One data point matters today. What it is: Canada's Consumer Price Index at 8:30 a.m. Eastern. What it's doing: core measures expected at 2.5 to 2.6%. What it means: Canada's CPI often leads US inflation by a few weeks. A hot print would be hawkish for rates globally. Equity impact, watch for surprise. Hot number is bearish. Cool number supports the soft landing narrative. Here's your cheat sheet. These are yours now. Rule number 1. Gold plus copper selling together equals growth concern. Rule number 2. When both systematic models agree, that's high conviction. Rule number 3. 10 out of 12 sectors bullish. Focus there. Rule number 4. 10-year at 4.06%, curve positive. Rate supportive. Rule number 5. Volatility above 20 means elevated regime. Reduce position sizing. Rule number 6. Volatility up plus credit spread stable equals equity-specific fear. Rule number 7. Dollar up plus yields down is risk off. Stay cautious. Rule number 8. Models bullish plus VIX elevated. Stay long. Trade smaller. Don't chase. Stepping back for the big picture. The macro strategist view is clear. This is still a bull market with inflation headwinds. Both systematic models are positioned long. 10 of 12 sectors have bullish momentum. The yield curve is positive. Credit spreads are stable. But overnight action is cautious. Volatility is elevated. The dollar is bid. Commodities are selling. This is not a contradiction. This is how markets digest gains. The resolution is straightforward. Stay long because the models say so. Reduce sizing because volatility says so. Don't chase because the overnight says so. That's disciplined execution. That's what separates profilers from gamblers. That's your macro brief for February 17th. The models are bullish. The overnight is cautious. The playbook is clear. If you want the full regime signals, all the sector momentum data.
Hi, good morning. This is Matthew Mickey, and I will be conducting our war game for Tuesday, February 17th, using candle signs, let me pull it up. All right, using Monday, yesterday, and Friday, well, Friday and Thursday, we can see that the lower probability low that was to be taken out was the previous day low. Our 60th, I'm sorry, correction. Our 30th, our 50th, and our 70th percent reversal zone is right here with the green box. So because volatility is expanding, we expect 50th to 70th to get hit, right? So the lowest point being 24,275, right? Because we're in a quarterly pullback, we're expecting quarterly lows to get taken, and then we're looking for either this month or next month for us to rotate back up. If we can't do that, then that puts us in a yearly change of character where we're expecting 50% green days, 50% red in this environment. So we're getting that. So we're just going to see, does the day put a reversal in and give us a green day? There's no real news catalyst for that, so we just anticipate, what the daily profile will show us, right? The big talking point today is going to be from the weekly context, right? So we know that this 50 basis points off this line and this 1% off this line both have an 84% probability and a 75% probability of getting hit this week. It did not get hit last week. With the variance, the streak has only gone 2 times in a row, right? So is more likely that we rotate back up than to continue selling off and not hitting it, right? So I am going to be looking for these targets throughout the week to get returned to, right? And so that indicates that we could be putting the low of the weekend, right? All right, so now moving on to our daily profile. So we saw that we were short true. So Tokyo market sold it off, Frankfurt and London markets sold it off, and now we're in a trending down. So we're going to see the probabilities of the levels above us, like P12 mid, which is 85%, and so forth and so forth. So let's go over to the daily profile and do our war game for that. So we're short true, none, right? We know we broke out of the long first. There's a 66% probability of it being false. So we're going to war game both scenarios. We know that we're going to go up to come down by 11:30, or we're just going to continue traveling up. Right? Now we know that we're in a 1-day true streak, so we can anticipate a second true day. Right? So with that being said, let's move forward, right? We know that the false, which we go up to come back down, right, is a higher probable movement, right? We can see for us to go up to come down, we can expect that high of the day that currently is at 1850 to hold, right? If we stay long true, we know that we're going to get a new high a day, and that the low of the day came from 4 to 8, and our current low of the day is at 810, right? So this supports a new low. This low day is supported for a long true, and the market's moving without us, all right? So it happens like that sometimes, right? Now, to get the false movement, we know we're going to be using the 4-step reversal downwards to see, can we get the false movement? If we can't get below 930, if we can't go below 9 o'clock's 50%, then we're not getting 2 of the main steps for the 4-step reversal, right? We knew that, and it's already hit, which sucks, but it is what it is. Right, we knew one of our main levels that we were going to be focused on was that P12 mid level. It just got hit. It had a 98%, 98, a 77 on a false of getting hit between 9:30 and 9:45. That got hit. So now we're going to be looking to see if the P12 high gets hit, right? If the P12 high gets hit, we know that we're more likely to be in a true state, especially if we hit it between 9:30 and 9:45, because that's anchored off of the high of the day data that we looked at. The high of the day is the deciding factor if this is going to be a true versus a false, right? So with that being said, P12 high is right up here. Levels, now we have settlement and Globex that we can look at. Do we need to reach all the way up there to reverse? Do we need to reach all the way to Asia OU to reverse, right, to come back down? Right, so for a false, there's only a 48% probability. For settlement, it's only 47% based off of what Asia and London has done. Right, if we put day of the weekend, we know that the settlement does not increase, right? So if we hit settlement and Globex, right, that's another indication that we're on a true side versus a false, because it goes from 40% to 70%, right? So that's another key indication and clue that we're in a true state than a false state, right? London's broken. Thank you for reporting that. So how does that affect everything? It doesn't affect too much. It does give Globex and settlement a boost in the false state, and it definitely gives Globex and settlement a boost in the true state, right? Like I said, it's all going to come down to these levels right here. We're going to be able to decide right here, right now, first and foremost, can we get above P12 mid? We know that this London high in the last quarter has been hit 77 times, and the max miss streak has been 30. It's gone on a 20 streak, hit streak, right? So this London high, the settlement, right, is the second zone. I'm going to see, can we do something like this to come back down, and then we start doing the 4-step reversal, or are we going to go up the net like that? If we make it to Asia OU, then I have to start accepting the true standpoint. So if we just step above, find footing on, step above settlement, find footing on, and continue to go up, then at some point I have to say this is the low of the day and expect a long true state, right? So I'll be prepared to do that at that level. But for now, going into the 930, right, I'll be looking for us to continue a little bit higher to this London OU, and then get another rejection unless this is the actual netting that happened at P12 mid, right? So let's go for our 4 steps. Let's put our low day, high day for long false. We can see for long false, right, our high of the day is at 1800 between 0.21 and 0.3. So let's put that in our indicator. 0.1 to 0.3 from 18 to 1900, right? And we know that that's been hit right here. We overextended it. We went to 0.39, right? And then let's put our low day for a long false. We are going to put 1.3 to 1.4 happening between 945 to 1600, right? Because there's not enough dominant data right here, right, to support it spread out, right? So 945 to 1600 between 1.3 and 1.4. So negative 1.3 to negative 1.4, 945 to 1600. All right, so let's let that set up. So that's right there. Do we have let's put our price cloud on it. Right, you can see with the long false, right, we're expecting more of a range 1 condition in the price cloud, right? So we know we're expecting this kind of scenario, right? And do we have the distro for it? We know that volatility is expanding, so our 10-day median range off P12 high is 585. So if we meet the 10-day median range, right, we're going to overshoot, right? For New York 1, right, we know off of this high, using the quarters, we have 209. So that would bring us to like right here. And then New York 2 would have to finish the job to get us to the low of the day, which is at 0.86. And even if we put them just picture perfect like this, that would get us to around the 10-day median range unless we overspin. Now we see that Asia overspin its checkbook, London overspin its checkbook, so we can anticipate that New York 1 and New York 2 will overspin its checkbook. But we know right now this is a statistical framework of the highest probable movement for the day, right? This being the low of the day, high of the day is already in. When a red daily candle, we can anticipate to get to 398. Well, let's match that with our candle science, right? We know that we're expecting 397 is where the 50th percent reversal zone is, and that's matching with our low of day 398, right? So this is something that we can anticipate. The one thing we have to question is our price models are indicating a New York range, right? So we have to anticipate this right here, right? And for us to range in the New York session, and then we'll use New York 2 to kind of drive the rest of that, right? All right, so that's the playbook for New York 1 false, long false. And so now let's go look at what a long true looks like. Right, we're going to start with our low day, high day. put our price cloud up, which we're starting to see evidence of that, right? Let's put our high day, low day up, right? We can see right now, our current low of the day is around 8. We don't have data to support that now, right? Because we broke London, right? But it also anticipates a high day between 10 to 10:30 or end of day, right? Or it's in here, right? So with that being said, it goes back to 8:10 being the low of the day, 209. So coming up to London high, which has a 77% probability, is the distro for New York 1. But the biggest thing is we won't be able to do the 4-step reversal. And once we start breaching these levels between settlement and this London high, that's going to be the stance to say, hey, this is a long true, and our job is to buy the dip, and we got a reversal coming in. All right. When it comes to high day, right? Like we can expect, so just to barely make a new high day, because our current high of the day is 0.39, right? And the mode to median for a long true is from 0.2 to 0.4, 0.5 in the RTH. So let's put that in there. 0.2 to 0.5, and we're going to go 10 o'clock to 1600. And then let's put our low of the day in, right? Between 0.8 and 1. Let me fix this. Negative 0.8 to negative 1. And we know that for a long true, the low of the day definitely is supported sometime here. But this 745 to 8 would be where it currently sits at, right? We can see that there's not many more cases for a low of the day at the end of the day. So these two low of the days are when we make a new high a day between 9:45, 10 o'clock, and then we start drifting back lower, right? So we are going to be tracking that, but it's more likely to continue upward moves. We plan at the low of the day at 8, and we anticipate a new high of the day here, right? And this is more of a trending model. So like I said, if we can't do the 4 steps, we definitely can expect to trend up higher, right? And then from a daily 10-day median range, volatility is contracting. From a session distro, from a quarterly, volatility is expanding, right? All right, so with that being said, main key point is still looking for the 4-step reversal. Going to be looking at how we respond around London high to settlement, right? Or are we even able to step above P12 mid and the high is in? And our job is to continue selling towards the low of the day. So let me put this back on because this is the highest probable movement right here. So come up, they come down to 398 or 24,400 big figure, right? And if we want to get spicy with it at the open, we come up to settlement and then we come down and make a new low a day. All right, so hopefully that helped. That's my game plan going forward. Y'all have a good day. Later.